Hey everyone, and welcome back to another video for today. So we survived the September Fed meeting. This is the heat map at the time of making this video after the market closed on Wednesday. Of course, when the numbers came out, when they announced the rate cuts, when they announced the dot plot, when Jerome Powell started to speak, of course, you had ups and downs. But we did end the day with mostly ups, especially with regards to the stocks that we do follow here on the channel. The watch list here previously was quite red. I think 75% of the names were red. Now we closed the day a bit better than 50-50. Now in today's video, of course, we're going to talk about, well, what was mentioned during that Jerome Powell speech, talk a little bit about the upcoming meetings. We have some Lisa Su clips to look at. The CEO of Anthropic had something to say about selling chips to China. And then, of course, we have to talk about the Google and PayPal news that came out today. So all of that in this video. I will also share my thoughts on my potential buys in the coming days. So if you enjoy this type of videos, hit all the buttons, especially the notification bell. Would really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. All right, so the FOMC lowered the target range for the federal fund rate to 4% to 4.25%, down from the previous 4.25 to 4.5%. Now, as you can see, currently we are still expecting 2 cuts this year. In 25, 1 cut in 26, 1 cut in 27. That remains unchanged. Now, what was mentioned during Jerome Powell's speech is this, but before we jump into that, if we currently look at the probabilities of what's expected to happen in the October meeting, 89.1% probability of another 25 basis point cut. And then if we look at the December meeting, almost jumped here to the January one, in the December meeting, we are expecting, well, another 25 basis points cut, so 80.8% probability of another 25 basis point cut. 18.2% probability that we will only have the September and the October one, and a 1% chance that we will only have the September cut. So basically the one we just had, and then nothing in October, nothing in December. Of course, over the next couple of weeks, we're going to come back to this and see if the probabilities have gone up or down. Going back to the Fed's decision, that was based on a few economic indicators. Economic activity has been growing at a moderate pace in the first half of the year. Job gains have slowed and the unemployment rate has edged up. The Fed noted that downside risks to employment have risen, which was the primary justification for the rate cut. Inflation remains somewhat elevated and the Fed is still committed to its long-term goal of 2%. The lone dissenter was newly installed Governor Stephen Miran, who voted for a more aggressive half percentage point cut. Powell stated that the increasing risk to the labor market had crossed a threshold that warranted the rate cut. He emphasized that the decision was data dependent, with a focus on preventing further labor market deterioration. Powell's language was measured, and he did not commit to a long series of rate cuts, noting that there was no widespread support for a larger cut at this meeting. He left the door open for future adjustments, a stance reminiscent of his mid-cycle adjustment language in 2019, which was followed by 2 more cuts. Unlike the transitory inflation of the pandemic, Powell distinguished the current inflation pressures, which he attributes in part to tariffs, as a one-time shift that the Fed will work to ensure does not become a persistent problem. And so if we look at the script, what changes were made? Well, we have a couple of changes here at the start. Recent indicators suggest that growth of economic activity moderated in the first half of the year. Previously, that was, although swings in net exports continue to affect the data, recent indicators, etc. Job gains have slowed and the unemployment rate has edged up but remains low. Previously, that was, the unemployment rate remains low and labor market conditions remains solid. In this case now, inflation has moved up and remains somewhat elevated. And then we have couple of extra changes here. Now, looking at the summary of economic projections, this is basically it compared to, well, the June projection. So change in real GDP for 2025 sits at 1.6 previously 1.4. It has been revised up for each and every year. Looking at unemployment rate, also a bit better, I would say a bit better. PCE inflation is not better for 2026. That sits at 2.6. June projections sat at 2.4. But for 2028, that sits at 2% here, and the longer run also 2. Core PCE about the same. And so right now, what do we get? We get the 10-year here yield at just above 4%. At one point, it did drop slightly under 4%. But if you look at the more shorter term ones, in this case, the 2-year, that sits at 3.55%. Of course, much lower to where we were at the start of the year, 4.36%. As for the euro dollar, sits at 1.18. For those asking, yes, I'm European. So now with my euros, I can essentially buy more dollars, which means I can essentially buy more shares in USD than I could at the start of the year. Now, of course, if I start selling my US stocks and convert them back to euros, I will be on the losing end. But me personally, I have no intentions on selling my US stocks and then converting the US dollars back to euros because I don't need them right now. They can stay in the portfolio in USD. Before moving to Lisa Su's comments, look, everybody was anticipating huge moves here with the Fed's meeting. Well, didn't really happen, to be honest. It didn't really happen. Yes, we had some intraday fluctuations, but nothing much has changed. And to be honest, nothing much should have changed for you because you invest in companies. Yes, it's true. Some companies benefit from rate cuts. Some others benefit from higher rates. That's true. But right now, did this change much? 25 basis points? Not really, right? You need a strong economy. That's the most important. And you also need to listen to what management of each of your companies have been telling us for the last couple of weeks and months. Guidance, was it strong? Yes, we just finished the earnings season. I think guidance and earnings across the board for most of the companies were quite good. And that's the most important part here. If we do get tomorrow a hangover reaction by the market, maybe take the opportunity to look at some good deals. But as I always say, probably the best deal is already in your portfolio. Now, let's have a listen to Lisa Su talking about the so-called AI bubble and then also talking about the China issue at the moment.
Like I've spent a lot of time in the technology business. I would say that we're probably on a massive 10-year cycle in terms of AI technology and AI build out, and we're probably 2 years into it. So we're still in the very early innings. There are ways to really think about how we protect national security as our number one priority, which we are. Our most advanced chips are export controlled, and they should be export controlled. But there is also an opportunity for us to get a AI stack that is based on American technology out into the world, and I think that's a good thing. And that's really what we have been focused on, which is finding that right balance.
So I'll quickly touch on these two comments. On the first one, this is something that we've been discussing quite a lot on the channel and during the live stream as well. We are only 2 years in, right? 2.5 years or so, almost 3 years now. ChatGPT came out. So we're still very, very early in this cycle. Lisa Su says we are in year 2 of a 10-year cycle. Okay, maybe another 7, maybe another 8 year or so where things are expected to go up and up and up and grow into what they think is a $500 billion market. I agree with that. There are still plenty of opportunities out there. We're talking here about huge infrastructure build-outs, and that's something that is happening around the world, and that's something that takes a lot of time. So I agree with that. I will also say that, yes, I do think that there are AI bubbles in pockets of the market. This is something that I've acknowledged, and I've said it time and time again. There are definitely bubbles. Actually, there will always be a bubble somewhere in the market, just like there will always be overvalued companies, there will always be undervalued companies, no matter where we are in a cycle. Then as for the comments on the China business, look, she's being here, of course, a CEO of AMD. Jensen, CEO of NVIDIA, was also not that happy with the statements from China because China is a huge market for AMD, for NVIDIA, for basically semiconductor players. Yes, it's true that maybe some of these chips need to be export controlled, but some others, some that were always made specifically for China should have never been on that list, right? The mistake here has been done a long, long time ago, which was basically banning the sale of those chips to China. That was the first big mistake. And now we're in this type of circle back and forth. Yes, no, maybe this is part of the negotiations. I don't know, but it's definitely going to be an issue if American companies cannot sell into China, and well, the tech will not be American. Now, what the CEO of Anthropic is going to say is, well, the exact opposite of what Jensen and Lisa Su have been saying.
NVIDIA, there's some reports out today that maybe China's backing off on buying chips from NVIDIA.
I hate it when people call it NVIDIA. I mean, it's NVIDIA, not NVIDIA.
I don't think you're certain like how much of that's posture. I'm not certain how much of it is. But Europe, you think it's nuts that we're allowing NVIDIA to sell chips to China. Explain why.
I think it's completely nuts. So, whatever the dangers of the technology, whatever guardrails are needed, I think it's also very important that we defeat China in this technology, right? When I talk about, AI that's capable of doing, all economically valuable labor, or that goes to the point where it's a country of geniuses in a data center, just the national security implications of that are absolutely staggering. Right? It's just like this could control the fate of nations. This could control the future of freedom and democracy. And if we look at all the ingredients, China has many of them better than we do. They're better at building energy. They're better at building data centers. They have a thriving app ecosystem. They're catching up on the models. Chips are the one place where they are behind. And so if we give them those chips, they will be able to get ahead of us.
So here we have someone that is definitely not pro these companies selling chips to China. I guess no matter what type of chips they are, if it's a B30, H20, MI308, doesn't matter. But I would like to say that everything is said towards the end there. They're better at this, they're better at that. Maybe it's time for us, Europe, the United States, to become better at energy, have a great app ecosystem, right? Be better at what China is better right now. Because China is not sleeping on the fact that they are behind with regards to chips, right? They're not sleeping on that front. And so, yeah, I mean, what do we do? Do we give them the MI308s, the H20, the B30s? I think so, because I still think that it's just still much better to have a Chinese ecosystem that's built on top of Western, or in this case, American tech. Because if we do not do that, then yes, my prediction is that, yeah, in 5 years' time, something like that, I do think that they will have, whether it's Huawei or something else, they will have a very, very much competing product. And that would be probably the worst case scenario. Last news item here, and that's Google and PayPal forge multi-year partnership to revolutionize commerce. And yes, this is probably one of the main reasons why PayPal was up 3% or so today. Great news for us options holders. So, Google and PayPal today announced a multi-year strategic partnership focused on advancing several commerce solutions. The collaboration will deliver innovative solutions that transform how businesses and consumers transact across platforms and devices. Combining their expertise and scale, the companies aim to deliver frictionless digital commerce experiences and set a new standard for commerce ecosystem innovation. We have here a comment by Sundar Pichai, CEO of Alphabet. PayPal is a leader in digital commerce, and we're excited to expand our work together to make online transactions simpler and more secure. Through this partnership, PayPal will use our industry-leading AI to enhance services and security, and we will more deeply integrate PayPal's innovative payment capabilities for a better experience across Google products and platforms. Comment here from Alex Chris. In this emerging world of agentic commerce, trust and innovation are key. Together with Google, we are leading the way for digital commerce, ensuring greater opportunities for merchants and users worldwide. We are bringing PayPal's products and services to billions of Google users and redefining what's possible at global scale. I think PayPal is going to be, the payment method of the agentic commerce era. We've also seen their partnership with Perplexity. So Alex Chris at PayPal is definitely a completely different beast than Dan Schulman. So what's happening here? One, we have agentic shopping and commerce experiences. PayPal and Google are collaborating to create new AI shopping experiences and developing standards that will help shape the future of agentic commerce across the industry. PayPal solutions, including PayPal branded checkout, hyperwallet, and PayPal payout solutions, will be integrated throughout various Google products supporting best-in-class seamless experiences. PayPal Enterprise Payments will be one of the key payment providers processing card payments across products like Google Cloud, Google Ads, and Google Play, boosting PayPal's role as a trusted payment solution within Google's core platforms. PayPal will partner with Google Cloud to reimagine its technology foundations, applications, and infrastructure to power PayPal's next-generation commerce and payment platform. What I'm seeing here is, of course, an increase in TPV. What I might also be seeing here is that I think there will be a Gemini 3.0 release pretty soon, one where agents are going to be the focus of the attention here, and maybe this might also turn Google Chrome into an agentic browser, which means that with this integration, maybe yes, that agent can make payments in a secure way thanks to this partnership. This is just me speculating, but it makes sense, no? If you want to have AI agents, then those AI agents should be able to make payments for you, should be able to book a hotel, flights, whatever, for you in a secure way. What better way to do this than with Google and PayPal? And so right now, what did we have? We have actually PayPal closing the day at up 2.65. I said 3%, 2.65. Okay, forgive me. Still good enough. We had Nebius close the day up 5.2%. Let me actually put myself right here. So we're closing in again on that $95. Iron up close to 4% here. Marvell actually up 3%. So back above $70 right now. Applied Digital also up 1.9%. BMNR, $57, up 2% there. CoreWeave was up. So we did definitely have a reversal compared to when we ended the stream. Uber was still down 5%. Did rebound on that 50-day moving average here. Nvidia still down 2.6%, of course, on the China comments. Intel was also down. Palantir down 1.1%. HIBS down 1%. SoFi was down 1% as well, but still holding up quite well. Oscar did have a nice little reversal. They did find quite a lot of buyers under $17. AMD did close out the day just under $160, and Duolingo down 0.5%, but this one has also found some buyers throughout the day. And so, to me, my plan is still the same. I hold good companies, in my opinion, in my portfolio, and I will continue to accumulate accordingly. Doesn't matter what happens here, rate cut, schmate cut, I don't care. I've added yesterday, I've added to Nebius, a little bit to Oscar as well, and I will just add to the other positions such as the local. Maybe I will be adding a little bit more to Duolingo just to reduce my average there, because I am still down around 15% or so. So yeah, I think, and I said it again and again, I know, quite repetitive, but you just have to look at your own portfolio, and I'm pretty sure that you own some great companies that you might want to own more shares of. You don't have to open up new positions for the sake of opening up new positions. Yes, I know there are plenty of great companies out there, but do we have to buy all of them? Not necessary. Yes, sometimes you can be opportunistic. If a great company did drop and you think it's an overreaction, then for that quick gain, then yes, you might open something quickly and then close it out when it's up 10, 15, 20% or so in a week. I agree with that. It's a good opportunity. Why not? But all in all, that's about it. Do let me know what you've been buying over the last couple of days, what you will be buying over the next couple of days down in the comment section below. Hit all the buttons and we'll see each other in the next one. Bye-bye.